Afternoon, traders. I hope everyone has had a good Monday so far. We have a fairly quiet week, and the markets are we're coming off the back of a lot of news from last week. Having said that, we do have some news coming up at 8 p.m. I think it should be right about now on the pound. So we should be expecting some movement on this pair right here. So today, what we'll be doing is time price volatility, which is basically what's the relationship. You're exploring the relationship between prices and time. And at what point do you start to see a lot of engagement in the market? And basically, it's a relationship that's very useful, especially when you're looking for momentum setups. When you're looking to enter, when there's a lot of momentum, that is when you have at least price letting you know whether you're right or wrong on your trade earlier on. So let me just note that down. So time price volatility is good when you are, let's write this here. Time price volatility. Yeah. So when you're a day trader or when you're trading daily, you wouldn't want to be in a setup that's taking so long to materialize, and you wouldn't want to be caught between something that you don't know whether it's going to go your way or not. And most of the times, looking at the time, what thing exactly? Oh, I get your question. I think we'll answer that towards the end. So when looking at the time, you're getting a better grasp of when exactly you need to be trading and when you don't need to be in those setups. Because most of the times you find that the market is very quiet. And we'll explore two major time zones. And that is the New York session and the London session. I believe those are the two most important trading sessions we have. And that's when this relationship holds, which is there is an increase in volatility when at certain times of the day that you can exploit to your advantage. So before we go on, I can just go through that relationship briefly. We can go through the time zone so that we understand them. And I'm going to share this right here. Just a minute. This one. Over here. So is it going to go that side? Okay. Yeah, over here. So what you're looking at is a chart of local time against major sessions in the market. So to understand time price volatility, you need to understand when the various sessions of the market are occurring, and this is going to give you a guide of when momentum is going to come into the market. So for example, typically, first let's go through the major time zones. From 12 a.m. all the way to 8 a.m. That's when Sydney session is going on. So this is local time, 12 a.m. to 8 a.m. local time. And then Tokyo session starts roughly from around 1 or 2 a.m. all the way to 10 a.m. And then from 10, this is where we have London session coming in. And this is where majority or a lot of volatility comes in, because we've had this quiet period. So during Sydney and Tokyo sessions, price tends to be very muted. Price movement is usually very muted when there isn't a lot happening in the market. There are not so many buyers or sellers in the market. And then because you've had such a long period, almost 12 hours, around 10 hours, usually we have a burst in volatility or an increase in volatility from around the London session, which gives you enough time to prepare, number one. Number two, you can formulate sort of a momentum strategy from that. We all know the strategies like momentum, London open strategies, all those strategies, they're basing on the fact that momentum comes into the market at certain times of the day when the two major sessions are opening. That's the London session, and we have the New York session. So the London session is the first major session of the day after a fairly quiet session from the night. So that's from 10 a.m. So usually from around 10, the first 2 hours, basically the first 2 hours of the market, you'd expect some momentum because that's when banks are opening. That's when the market participants are coming in, pending orders are being filled, and all those sorts of things. This is where you expect volatility for the day. And then the other point where we expect volatility is during the New York session. So the New York session coincides with the London session, and these are the two major sessions. So when the New York session is starting, then this is the point in time where we have the greatest volatility coming into the market. And we'll have a look at how to use the volatility to come up with setups and the likes. But in the meantime, when you're talking of time price volatility, you're simply talking about the London session and the New York session, which is from around 3 p.m. So these two sessions, if you've seen a quiet market, then chances are we'll have activity coming back in at this point. So I think I'll just exit this, go back to our charts. I got you. All right, so we look at a couple of charts. The first one being a Euro USD chart. And straight away, I can start seeing where we've had periods where the market was mute and where we had a lot of activity in the market. So for example, in this case, our Euro USD chart, we have our period separators, which are the dotted lines. So these lines over here will typically separate the day when it's on H1. When it's on H4, then it's a week. So when you put it at H1, you can start to have a feel of when you're seeing big candles and when you're not seeing big candles. For example, we know that since this represents midnight, then the first few candles are the first candles of the day. That means that this is early morning hours. And then later, like right now, we have candles towards the end of the day. So if you look at this, you can start to see a recurring pattern that it doesn't happen all the time, but it does happen a good number of times. And that is, we've said the New York, the Japan and Tokyo session are usually midnight. And we know that these period separators, this is where midnight is. And we tend to see very muted candles around midnight, very small candles, not a lot of movement. If I was to mark this going backwards, you can see this occurring generally everywhere. We have candles that don't move quite a lot. I think I'll measure this till 8. Yeah, till 8. So this is until this point here. And then here we have, again, same story, candles that are not quite as large until around 8. So let me just mark for these days. Yeah. And then for today, we have from midnight, which was the first candle of Monday, all the way till 8, like that. So in this case, is 8? Yeah, it's 8. Like that. Then this one also from midnight. So what I'm doing is I'm marking where the Tokyo and Sydney session have started, so that we can see the pattern that I'm talking about. And in this case, we have 8 is over here. So it's this one. You got it. So the orange, the reddish, or is it pink? The pink sections are where London session, sorry, the Tokyo session coinciding with the Sydney session is, and you can see it's generally very small and muted candles. Then what happens is the first 2 hours, the next session is usually the London session, and the first 2 hours of the London session usually or typically have a lot of volatility. So I'll start with this one. We'll just zoom in a bit onto this one. And as we are going through these charts, make sure to understand, see what is happening, and try and practice the same on your chart. So the reason I'm using Euro USD is because it's the most popular and it's the one that is the most active during the London session. So in this case, I've marked my high because I know this is midnight. Over here. I know that's midnight. Yeah. This entire session, I've marked the high of the London, sorry, the Tokyo session. So let me just put them here. Okay. Oh, it's not changed. Okay. Yeah. So if you mark the high and mark, actually, I'll just use a normal line. So I'm going to mark the high of this session, which was all the way back here. Actually, no, this is where the session started. So we'll start from here. So the session started from midnight, and I've marked the high of this session like that. Sorry. So okay, just edit this. Like that. And I also mark the low of this session. So if I was to move this aside, I just pick a point like that. And you can find the low of the session like that. So properties, like that. Yeah, so you can see we had a lot of activity, then price moved into a consolidation. Then at around 10, we saw that, just move this bit again. This is okay. At around 10, we saw this candle over here, accompanied by this bullish engulfing candle that broke the high of the previous candle. So in this case, we have a situation where the London session, the Tokyo session was very muted. So I'll put this in a different color. The Tokyo session was very muted. And then eventually, what did we have? A slight fake out to the lower end, to the low of the Tokyo session. And then we had a burst in volatility, and that went that way. So in most cases, when you're shifting from the Tokyo, or when you're shifting from one session to another, there's usually some sort of stop hunt that occurs. That's a fake out. So a fake out is when the market goes in one direction before going in the other direction. And why will the market do that? Most of the times it's to fetch liquidity or stop losses or whatever. The reason we believe there is liquidity at this point is because this is generally a consolidation. And if it's a consolidation, then you'd have guys even in the lower time frames, placing stop losses here or pending orders here and above or close to the high. That's why you've marked the high and the low of the session, of the Tokyo session, which is from midnight to around 8. And then we had this small fake out, and then we had a burst in momentum. So price will generally tend to seek liquidity before heading in the intended direction. And that happened again in the next day. Again, we've marked our area from midnight all the way to 8, right before it was 9 p.m. Just a minute. Okay. Yeah. So we've marked where the session started, which is midnight, all the way till the end of the Tokyo session, right before the London session. And what happened in this case was slightly different from here, because prices went for this high. So there was a high here that wasn't really part of the London session high. I'm using this wick over here, like that. Yeah. So prices went for this high, which was a run on liquidity. Why? Because this was the most recent high in this uptrend. And then afterwards, we had a solid reversal back down. So again, look at the sizes of the candles right before we had this push up. We formed a really large range compared to the previous candles. And then after that, we went lower. So most of the times, this will keep on recurring, but it's up to you to know how to identify liquidity, which is a whole different conversation. It can be the high of the session. It can be around a non-market structure pattern or a non-support or resistance area. So those are things that constitute of the other part of the analysis, which is what you have to dig into. But in most cases, you will see a run in liquidity before we head in the opposite direction. So you just need to know where that liquidity is in that case. And then here, this was the following day. Again, we had muted, fairly small candles. So I'm going to identify midnight being here. This was midnight. We know this is the Tokyo session or the Sydney session, way up to 11, sorry, up to 9, 8, 9, like that. And then within the first 2 hours, so this is 9, yeah. So within the first 2 hours, in this case, we didn't have a run in liquidity. However, we still had momentum to one direction. So again, it depends on how you've analyzed the charts. You can be looking for reversals. So this isn't a strategy on its own per se. You wouldn't want to base your entire entry setup based on the London session. The time price volatility concept is just for you to know when to enter and instantaneously see results in the market. So if I was, for example, looking for, in this case, we are in an uptrend. So this is an uptrend. Why is it an uptrend? We are forming a series of higher highs, higher lows. But every time it came around midnight or the Tokyo session, the market was muted, and then volatility, muted market, because this is the midnight point, and then volatility. And then here we had the market slowly grinding along to the previous high, then we came back. So if I knew I'm in an uptrend, then the thing is, I'm going to be looking to enter when volatility or when momentum is back in the market. And when do I know momentum is back in the market? The London session open is going to give me that momentum, and it's also going to validate my setup. And now that in this point here, we had a break in market structure. So if I was to push this like this, now that we know we are heading lower, then the London session just gives you an opportunity to enter and immediately see movement in the market. So you wouldn't want to enter when prices are chugging along like this. It might take a while and it might be frustrating as a trader when it comes to knowing whether you're right or wrong on the setup. And then there comes today. So this was the price action today over here. We know we're in a downtrend. We also know that, let me just zoom in. Okay. So we know that this was the high of the session and this was the low of this session. And by session, we're referring to the Tokyo session, high and the low. And then now this one will have been a tricky one because it seems as though on the higher time frame, you might be going back into a reversal. But then again, if you know your market structure properly, go back here. If you know your market structure properly, then it shouldn't be quite a hard task to go through this one. So, for example, put it like this. So I've gone into a lower time frame just to have a look at it again over here. So what happened? This was the Tokyo session. As you can see, prices made a high, made a low, and simply moved around this point. Finally, what we had, because we were anticipating a downtrend, this was at 10 p.m. We had a short run for liquidity and then a reversal immediately afterwards, lower. So in this case, even if you had decided to be a seller, you wouldn't be badly off because you'd either have been exited at break even or exited with a small profit, because at the end of the day, the context of the trend dictated that you look for sales. And if you still were looking for sales during the London session, it wouldn't have been taken you badly off. And conversations keep on revolving back to context, which is knowing the bigger picture in the market. And that mainly involves higher time frame analysis, then knowing where your liquidity is. And then from there, you just use the London session as a catalyst for your entry. Okay, so the reason you're picking Euro USD again is because Euro and London times coincide. They're, I think, 1 hour apart. And it's a good enough asset class when you're trying to get into entries during the London session. But then what about the New York session, which is from around 4:30? Because I understand some people like trading in the morning, some people like trading in the afternoon. So one of the best assets to look for momentum for the New York session, again, you said New York starts from 3:30, and that's when you're going to experience some volatility. And one of the best assets to do so is looking at the US indices, and I'm going to use NASDAQ, which is UT100 on the platform, on the FXPesa platform. The story is going to be the same. Now, instead of now seeing a lot of volatility at the start of the charts, you see a lot of volatility towards the end. And that's where the difference comes in. So when you're looking at trading the NASDAQ, then a lot of volatility comes in towards the end. But the story is the same. Context, know your structure, and then that's when you can find an entry using that. For example, for today, if I was to mark my highs and lows for the previous session. So in this case, I'll be marking the highs and lows for the previous session. And I know that for the New York session, we are starting at 3. So let me move this to where 3 is. So this is where 3 is. Then most recent high is over there. And the most recent low is over there. Okay, so first to mark this. Yeah, so let me mark this session. So this is both the London and Tokyo session. So this is activity for the day, way up to before the New York session. And then after the New York session, this is when we had a large burst in momentum, and it seemed as though the bias is downwards. So if you go back to your lower time frame, now that you know the context is you're in a consolidation, you don't really have a bias per se, because the markets seem to be uncertain on the direction. Then it might be a bit trickier to try and trade. But nonetheless, if you go to a lower time frame, so this one is a slightly different setup. On a lower time frame, what you can see is the market breaks this range after 3, that is. So in this case, we didn't see, okay, we had these wicks over here, but we didn't see the type of volatility we wanted way up to when this was broken. So in this case, you'd want to know where the most recent high is and the most recent low is. If we had a bias for this market, then we will know what to do once price breaches either this point. So let me remove this. So I'm talking about this point over here. That's the most recent high. And this point over here is the most recent low. So if we knew what our bias was, in this case, we're in a consolidation, so it might be slightly harder. But if we knew what our bias was, then that's when we'll be more informed, or we'll be more certain on what to do when price breaches either one of these levels, looking for setups. So let's find a day where momentum was much easier to, the bias was much easier to predict, and that was during our uptrend. So when you're in a consolidation like this, I can state that this is the most recent low, and this is the most recent high. So in this case, we know that the market has just been oscillating back and forth between these points because of the uncertainty around policy and all that. So we don't really have a trend here. But if you look before us, right up to this point, we had a clear trend. So if I was to mark this from here, this one. So we had a very clear trend, which was a series of higher highs and higher lows. So we know we're in an uptrend. And in this case, knowing that we should be entering at 4 or at around 4:30 for the best momentum trades gives you an upper hand in your trading. So for example, if I was to mark this point, I can see that this was at 4. We had prices consolidating. It appears it was also forming a flag. So I'll just put this here. It formed a flag over here, moved for liquidity, and then we went higher. Same thing with here. We can start from here. Around 4:30. So not all the time that we'll have volatility, lack of volatility, and then volatility coming in at 4:30. Some of the times we might have news during the day that might impact the direction of the market. But in most cases, you'll have the market being quiet before we have that upwards push in prices. Another point that was very interesting was over here. So in this case, we know that from the market structure, there's supposed to be a key level here. Just a minute. Where is it? Yeah. Okay. So we do know that we've been in an uptrend, yes. The market has been fairly quiet. And then what happens is we had a brief burst in momentum. We moved higher, then it came back lower at this point, and then the market came back within the range. So in this case, in as much as we were in an uptrend, we didn't really have a chance to go higher when you're looking to trade. So this can tell you one of two things. Either this level is being observed and that you're failing to go higher, meaning we might see a potential reversal in the trend. That's number one. Or number two, we're accumulating orders before going higher, which simply means either people are taking profits or cutting their losses. So in this case, the pattern might not occur every day, but it gives you a good barometer, or is it a good measure of when to anticipate volatility, especially when you have a fairly quiet day. So it's a good way to gauge yourself. So these 2 days here, we had the market whipsawing back and forth, forming somewhat of a channel, but then we have another clear entry at this point. So we had this muted activity from the start of the day, which was midnight, all the way till 4. And that's when we started having big candles and momentum favoring the direction of the current trend. So for more on time price volatility, it's a concept you use for entries. It's not something you use to find your context or your bias. It's something you use to find the best entries, the entries with the highest risk reward. Because if you're able to get in at precise levels when there's volatility, then you're able to adjust your risk reward to favor you, and in the long run to have a profitable strategy. So the entire strategies build around this. I know there's a lot of smart money concepts and ICT and all those concepts build around the fact that momentum and setups come in at specific times of the day, and it's good to be cognizant of that when you're trading. When I first started trading, I don't think I really cared about when to look for volatility and when not to look for volatility, but these things become apparent as you go on. So when you're trying to, in your journey in trading, try and spare some time during the London Open and the New York Open with the respective assets, see what the market, or see how the market behaves, and try and identify your liquidity areas, your market bias, and if that comes in together, then it forms one of the best trading opportunities out there. Of course, a lot of factors go in. Just like anything in trading, it's never really straightforward until you've had time to practice on the charts. So having said that, I hope we're together on that in terms of time price volatility. There's a lot of content you can go through, especially on our socials, YouTube, and even during the classes. And it's something you can expound on, can come in for discussion at any time. And yeah, and just find out how to implement time in your trading. Having said that, If there are no further questions, my name is Samson Zera, and it's been a pleasure to have you in this session, and keep on trading. I think there's news on pound, while speaking right now, but it's very mute. Seems like he isn't saying anything that's going to impact the market. Yeah, it should be right now. We still have more news coming in and more sessions, so stay tuned and have a great trading week ahead.